is the gentleman from New York, Mr. Meeks, 5 minutes.
Thank you, Mr. Chairman. Mr. Chairman, number one, let's thank you for all of your work and what you do with reference to our great country. In your opening statement, you talked a lot and you indicated about jobs, and I think that's the going subject matter. Everybody's concerned about jobs on both sides and the creation of jobs. Yet we've had 35 straight months of private sector job growth, but we continually to have, as you said, high and stubbornly high unemployment rates. And this is, as I look at it, with that steady growth, we have shed over 600,000 public sector jobs since the beginning of the financial crisis in late 2008. In fact, the Wall Street Journal estimated last year that the unemployment rate would be at least 1 full percentage point lower if we still had those jobs, those 600,000 jobs. So my question to you is, what strains have these massive public sector layoffs put on your ability to stabilize the employment sector, and what do you think that we need to do in regard to that to replace those jobs?
Well, let me first say that I understand why states and localities in particular laid off a lot of workers because their tax revenues went down, they had to balance their budgets, and that was the only option they had. But it is true that state and local governments, their retrenchment during the recovery and their layoffs were a headwind for the broader economic recovery. And in fact, the fiscal retrenchment at the state and local level in this recovery has been much more severe than in virtually any other recovery. So the good news, I guess, and one of the reasons why I think we may have a somewhat stronger economy going forward, is that state and local governments seem now to have stabilized their budgets. And as a result, we don't expect to see those ongoing layoffs to the extent that we've seen them in the past. But yes, it's true that the contraction of state and local government budgets, together with more recent cuts in the federal budget, has resulted in job loss, certainly in those sectors and in the economy more broadly.
And sequestration, as we see it right now on a federal level, could exacerbate that, with reference to
I've just cited the Congressional Budget Office, which I think has reasonable estimates, yes.
Now let me also go to a question, because you've been asked about banks and banks lending, and Alan Blinder had an op-ed at the Wall Street Journal last year, if I recall, pointing out that in efforts to spur lending by banks, central banks in Europe are cutting the interest they pay on excess reserves to zero. In fact, the Danish cut it to a negative 0.2%, meaning banks would have to pay the central bank to keep reserves with them. Now, this seems to me to be a powerful incentive to either lend or put money to work in the markets. So my question is, do you believe that this policy, if implemented here, would it benefit the U.S. economy? And if not, why not?
Well, banks are currently being paid on their reserves 25 basis points, 1/4 of 1%. They're actually receiving less than that on net, because they also have to pay FDIC premiums on the deposits that they hold on the other side of their balance sheet. So they're receiving just a few basis points on their reserves. If we cut the interest on reserves, say, to zero or slightly negative, which is possible, it would have a very, very small effect in the right direction, but a very, very small effect on the incentives of banks to make loans. Basically, they're not finding as many loans as they'd like to make when they're earning 8 basis points on their reserves. Would it help to get it down to zero? It's in the right direction, as I said, but one of the reasons that we've hesitated to do that is because it would also lower returns throughout the money markets in our economy, and would create some problems in terms of the functioning of money markets, the federal funds market, and other short-term cash markets. So it's not clear that the benefits in terms of more stimulus outweigh the costs in terms of market functioning. That being said, it's always been something that we have kept on the table and talked about periodically.
So it's something that's still on the table and you're still talking about? Because I like movement in the right direction.
It's not a powerful tool, though, in any sense.
I have 10 seconds left, so I don't think I'm going to get my next question in. But because my next question was basically what you were told Senator.
No, the gentleman cannot get his next question in.